Bookkeeping and accounts payable are closely connected, with many bookkeepers performing the accounts payable function. This guide is designed to ensure that those doing so do so in an efficient and effective manner while protecting against fraud and collecting all the necessary data for complete regulatory compliance. It's harder than you think. Let's start with a quick overview of accounts payable. Here's a quick look at what the accounts payable function does in most organizations and how it operates. Responsibility number one, receiving and verifying invoices in a timely manner. Seems pretty straightforward, right? But it's not. Even the task of receiving invoices has now gotten a little bit more complex. Suppliers email their invoices, they send invoices through the mail, through the postal mail, and some of them fax them. And what's more, some of them do this more than once, and some of them will send copies to more than one person. So the simple task of receiving invoices has now gotten more cumbersome because there are more copies of the same invoice, and it is important that these duplicate copies be weeded out so they don't get paid twice, number one, and number two, so your staff does not waste a lot of time processing an invoice that is ultimately going to not get paid. How bad is this problem? About 25% of all invoices received today are duplicate copies. And they're not duplicates because people haven't paid yet. They're duplicates being sent for the first time. So huge task. The next issue I talked about is verifying invoices in a timely manner. You would think that the invoices would come in and they would be accurate, but that sadly is not the case. Oftentimes there is a discrepancy, and so the accounts payable staff, number one, has to get the invoice approved, so they send it out for approval to the person who ordered the goods, and then when that person approves it, they have to make sure that it's accurate. Now you might be wondering, well, why doesn't the person who approves the invoice also check and make sure it's accurate? And we could talk about why that doesn't happen, but at the end of the day, in most organizations, it doesn't happen. So it falls back on the accounts payable staff to verify that the invoice is accurate, and also that it's not fraudulent, by the way. And you'll hear a lot of talk about the proverbial three-way match. And if you're interested in more details about the three-way match, we've got a whole series of videos on that topic, and I'll link to them in the description. Okay, responsibility number two, which I've kind of already alluded to, is paying bills correctly. Now, in the corporate world, we use the word invoice instead of bills, but that's what we're talking about. So we've already talked about verifying that the invoice is accurate, and also now that you don't make a duplicate payment. Now, many people at first glance, when they hear about duplicate payments, they think, nah, how much, it's not that big a deal. The vendors will return the money. Well, that's not entirely true. In fact, that's only true in a tiny percent of the case. Most vendors will issue a credit memo, and that brings up a whole nother set of problems about you have to identify them, you have to find them, how do you process them, all of this is extra work. And some of them do issue the credit memos, and then the credit memos just get lost, and your accounts payable staff never gets them, and they're not aware of them. And still others don't issue the credit memos, don't return the money, and hope that you never realize that you paid twice. So this creates additional work for the accounts payable staff because they have to, on a regular basis, look for these duplicate payments. And some of this has gotten exacerbated in the last few years because we now have all these duplicate copies of invoices, mostly thanks to email, because it's so cheap to send an email. It's not like putting an extra copy of the invoice in the post mail. Along with all of this that we've been talking about, these operational problems, many organizations are now trying to move their payments from paper checks, which there's another whole host of problems associated with those, to electronic payments and some P-card payments, but mainly ACH, and that takes a whole lot of extra effort. So what seems like a simple task is actually quite complicated. Now, I realize that I've just provided a high-level overview of these two very important functions, and we've got more information. Obviously, it's a lot more complicated, and we did a 3.5 video on learning about accounts payable, and I'll put a link to that video in the description for those who want to watch it after this so they can get more detailed information. Okay, responsibility number 3, fraud protection. And when I say fraud protection, this includes both prevention, making sure you don't fall for a fraud, and detecting it so you don't fall for it, and then the follow-up afterwards to make sure that you haven't, and if you have, to try and recover that money. So all this takes time, effort, and a lot of it falls on the staff in accounts payable. Did you know, by the way, that accounts payable is often the first line of defense against payment fraud? They're also the primary target for many of these payment processes. If you're not watching closely, be aware that the fraudsters are, and so they will find ways to manipulate into your funds that you never thought of. If there is one tiny weakness in the process, sadly, they'll find it. And by the way, when we're talking about avoiding fraud, we're definitely talking about your money, but we're also talking about data, okay? Criminals realize that they can convert data into money, and so they're also looking to get your data. And so what falls on the shoulders of many accounts payable departments are becoming aware of new frauds as soon as they happen, alerting everybody to it, and making the necessary changes to existing procedures so that you have the necessary protections in place to prevent the fraud when it happens again. And it will. They'll try you again. There's probably nobody listening whose organization has not been targeted by fraudsters at least once, and most of us many times. Okay, responsibility number 4, regulatory compliance. This has become a huge issue. Ignoring regulatory issues can lead to massive fines and legal troubles, and a lot of these are related to your accounts payable function, and you need to make sure that you are compliant with all the latest rules. Addressing these increasing number of regulatory issues around the entire payment function can be a massive responsibility, and it's one that if you've never had responsibility for the accounts payable function or never worked in it, you may not even be aware of it. What am I talking about? Issuing 1099s, a huge issue in January, February, and when I say 1099s, I not only mean on the federal level now, many states have their own 1099 reporting requirements, of making sure that the proper sales tax is accrued and paid if it has to be, doing the necessary unclaimed reporting and remitting, which I have to tell you, many companies don't do, and compliance with the Foreign Corrupt Practices Act, which I call Don't Bribe Foreign Government Officials, and OFAC, which I refer to as Don't Pay It a Terrorist, and certain industry-specific guidelines such as the Sunshine Act for the pharmaceutical industry and conflict minerals reporting requirements for those who are using conflict minerals. And as I've already alluded to, there's been an expansion of the 1099 reporting requirements because now many states have their own requirements. So massive change, and it is necessary that you keep up with it. Before we get to appropriate controls and best practices, let's look at the interactions between bookkeeping and accounts payable. So let's level the playing field by starting with what is bookkeeping. Very simply put, bookkeeping is the recording of financial transactions, information that ultimately ends up on the financial statements and tax returns. Generally, it is considered part of the accounting function in anything but the very smallest of businesses. In small business, it may be most of the accounting function, but it is definitely not accounting, but rather the foundation of a strong financial and accounting system. In accounts payable, this might include processing invoices and setting up vendors in the master vendor file. In accounts receivable, this might include recording payments received, doing cash application, and billing. In payroll, this might include recording hours worked and payments made to employees, not to mention taxes. In treasury, this might include bank reconciliations and recording wire transfers made. The person performing these basic bookkeeping tasks might be called an invoice processor, an accounts payable associate, accounts receivable analyst, treasury analyst, clerk, etc. So how does the bookkeeping function work? The bookkeeping function starts with the documentation. This might be a purchase order, a receiving document, an invoice, etc. It also might be a wire transfer request. This source documentation is key in creating accurate records. Other source documents you might be familiar with might include bank statements, credit card statements, and credit memos. This information needs to be classified or categorized. This is generally done through the use of GL codes, also called general ledger codes. In the accounting space, we sometimes refer to all these codes as the chart of accounts. There should only be one chart of accounts for every company. Everyone must use the same chart of accounts. That's why it is important that good processes are put in place for establishing the chart of accounts in the first place and adding new GL codes where needed. Speaking of GL codes, what are GL codes? General ledger codes are numerical names you assign to an account. These are unique identification codes that allow businesses to classify and track their financial activity. You may sometimes hear this referred to as a GL account number. Use of GL codes leads to more accurate financial statements, greater visibility in spend, which results in better budgeting and tax reporting, along with increased efficiency and a reduction in risk. Bank statement reconciliations. The next step involves bank statement reconciliation. Bank statement reconciliations are a responsibility that bookkeepers will sometimes take on. Typical responsibility for the bank statement is to ensure, among other things, that all checks cleared. This reconciliation is often the step where a fraud might be uncovered if the organization has been targeted and the fraud has so far gone undetected. While the standard best practice for bank reconciliations used to be to do it on a monthly basis, thanks to new aggressive electronic payment frauds, bank accounts should now be checked and reconciled on a daily basis. The benefit of this is that it is much easier to reconcile a day's activity and try and find a mistake than try and find one that's buried within 30 days of activity. Bank reconciliations are typically, but not always, handled in accounts payable, treasury, or accounting, depending on which group has the bandwidth to handle them, while incorporating appropriate separation of duties. The next issue to be addressed is what type of bookkeeping or accounting to use. Single entry or double entry? What is double entry, bookkeeping, or accounting? Most ongoing businesses will choose to use double entry bookkeeping or accounting. Why? Single entry bookkeeping only records one entry for each transaction, usually in a cash account. It's often set up in a spreadsheet, but it can oversimplify your finances while providing an incomplete financial picture. An example of single entry bookkeeping in your personal life would be your check register, where you record cash in and cash out. In double entry bookkeeping, every financial transaction has an equal and opposite effect in at least two different accounts. This facilitates the fundamental accounting concept of assets equal liabilities plus owner's equity. The sum of all debits must equal the sum of all credits, as a credit is an entry that increases a liability account or decreases an asset account. A debit is the opposite. It is an entry that increases an asset account or decreases a liability account. Let me give you a simple example, a common one. Let's say a business loan of $125,000. The loan would be recorded in both the debit account and the credit account. The cash or asset account would be debited $125,000, and the debt, the liability account, is credited by $125,000. Notice the debit and credit accounts will equal one another. The single or double entry decision is related to whether you are using cash accounting or accrual accounting. Now, before we get to the differences between cash and accrual accounting and how you are probably using accrual accounting for your personal money management, if you're getting any value from this talk, I'd love it if you would hit the like or the thumbs up button. It sends a message that you are getting value from this talk and I should make more like it. A personal thanks to everybody who has hit that thumbs up button. What's the difference between cash accounting and accrual accounting? Accrual accounting records revenue and expenses when the transaction occurred, which is usually before funds are received or dispersed. Cash basis accounting records revenue and expenses when cash related to those transactions actually is received or dispersed. It does not recognize transactions that have occurred, but the funds issue has not occurred. This is where accruals come into play, as by incorporating that data, you get a more realistic picture of an organization's true financial picture. Think about it like this. If you look at your bank balance the day before you pay your bills, you might look quite wealthy on a cash basis anyway. You might look like you've got a lot of cash to spend, but hopefully and probably you know better. After you pay your rent due in a few days and that stack of bills sitting on your desk waiting to be paid, if you're anything like me, there's not a whole lot left. Realistically, if you want to estimate how much cash you really have, you'd add up all those outstanding bills, that's the equivalent of your accruals, and subtract it from your bank balance. Let me give you a very simple example from real life with some real numbers. The day after you get paid and before you pay your bills, let's say your bank balance is a hefty $3,500. That's your cash balance, okay? But it's not really all of the money you have. When you add up your expenses, your rent, your credit card bills, cell phones, etc., you might have $2,500 worth of bills. You might also estimate that you'll need another $300 for food and $75 for gas until your paycheck arrives. So your total expected expenses are the $2,500 for your outstanding bills, $300 for the food, $75 for gas, bringing that total to $2,875. That means you really only have $625 to spend, despite your cash balance being shown at $3,500. By the way, GAAP, which is generally accepted accounting principles in the U.S., requires accrual account for obvious reasons. The next issue that often gets raised when discussing bookkeeping and accounting is who prepares the financial statements. In only the very smallest organizations does the bookkeeper create the financial statements. But, and this is just as important, just because you're not responsible for preparing the financial statements, this does not mean you shouldn't understand what they are and what goes into the creation of these all-important documents. In most organizations, the bookkeeper will enter the data, as discussed above, verify it, and perhaps even do some of the reconciliations. But then that information will be turned over to the controller, who will prepare the financial statements and possibly do the tax return. Sometimes, depending on the size of the organization, there will be a separate person who handles the preparation of the tax return. This could be an internal tax professional if you're large enough, or someone from the outside. Protecting against fraud and duplicate and erroneous payments, by the way, means that strong internal controls are in place. Let's take a look at what those are. Your first control, if you will, is revolves around separation of duties, okay? When it comes to the accounts payable space, what this means is no one person should have access to more than one leg of the entire procure to pay chain. Now, separation of duties, sometimes called segregation of duties, kind of a basic, and it used to be just a small company issue. But you know what? Thanks to technology and innovations and us all doing a much better job, accounts payable departments are getting smaller and smaller, and so separation of duties has now become a mid-sized company issue in some cases. All right, let's move on now to our second basic control in accounts payable, the three-way match. Now, we have some other videos on the three-way match, so I'm just going to go over it briefly, and I'll link to them. You can watch them later if you want. So the three-way match involves the process that your accounts payable team should be using when they get an invoice to verify that it is accurate. The price is accurate, you got what you ordered, etc. And it involves matching the purchase order with the receiving document with the invoice. And interestingly enough, there have been a number of folks who've done surveys, and the document that has the most mistakes on it, according to anyway these folks, are the invoice. So don't just assume, oh, the invoice is accurate, I can go ahead and pay it, because if you take the approach, we get an invoice, we pay it, well, you'll be paying the wrong price, and you know they never charge you lower than you had agreed to, and you'll be paying some invoices twice, as we discussed earlier. So make sure you implement the three-way match and you stick to it. The next step that I want to talk about, the next building block, if you will, that everybody should be using is standardizations. So everybody within your organization, when they process an invoice, they do it the same way. And the benefit of this is that way, when when an invoice comes in and I process it, it goes through. And then when a copy of that invoice or a second one comes in and you process it, you'll be able to identify it very easily as a duplicate. So this means that we write out our standard standard processes, and then we make sure that we give it to everyone so that they can use it. This also includes, by the way, I'm not going to rant and rave about this too much, but a coding standard which tells your folks how to enter the data exactly. This is one of those places where creativity is not desired, and you want to tell people exactly what they should be doing and how they should enter the data. So simple example, when we start talking about having our suppliers, our contractors in there, or even if your employees are in the master vendor file for purposes of expense reporting, how you enter their name. Do you enter it first name, last name, or last name, first name? So do you enter Mary, Schaefer, or Schaefer, Mary? Those will show up when you're looking for duplicates as two different people. So you want to be very precise in how you set that up, and you want to make sure that your folks are all, using your precise instruction. Okay, the next thing that I want to talk about, the next building block, is your AP manual. Now, we talked about standardized instructions, and these standardized instructions should be put in your accounts payable policy and procedures manual. And that manual, by the way, should be shared with everyone. And this is the important thing, it should be updated anytime you make a little change. Too often people put a lot of work into setting up their accounts payable policy and procedures manual, and they have it perfect, and then they forget about it. And so they start to make little changes, nothing major, and they'll think, we don't have to update that, we'll do it next time. And then before you know it, 2, 3, 4 years have gone by, you've made 12 little changes, and what you're doing today in your accounts payable operation bears no resemblance whatsoever to that policy and procedures manual that you have sitting on your shelf. I like to call the policy and procedures manual your protection against the lottery. So picture this, everybody in your AP team, they chip in and they buy lottery tickets. A lot of companies, different departments will do this. Everybody chips in, and then you win $100, everybody gets $10, or maybe you get lucky and they win $5,000, and so and it brings camaraderie, it improves morale. But let's say your AP team chipped in, they bought the lottery ticket, and they won the big prize, and so everybody came in and quit because they now no longer need to work. Will you have a document that will allow somebody to go in there and get your bills paid and keep your company operating? That's your safety net, if you will, because if you don't have that manual, you are going to be in big time trouble should everybody walk out at the same time. Okay, so your standardization, it should be written down and it should be put into the policy and procedures manual so everybody knows what they're supposed to be doing. Okay, the next issue I want to talk about is approvals. You want to make sure that when you get an invoice that it goes out for approval. This will help protect against you unintentionally paying a fraudulent invoice that came in and looked legitimate. Now, you may be saying, but you told us to do the three-way match. Why do we have to do the approvals? And I'm going to tell you that basically companies do, okay? And but when your people do the three-way match, they know who your vendors are, who they ordered what from, and so if there's a criminal out there who's playing games, they should be picking it up. But the approval that they'll give you just says, go ahead, it's okay to pay this invoice. Most of your purchases, when they're approving that invoice, they don't check the price, they don't check the quantity, they don't even really know if some of the stuff was broken when it came in, etc. So that's why you do the three-way match. But you also need the approvals, because this is kind of another set of eyes looking at the invoice and saying, yes, these are people that we do business with. Yes, we want to go ahead and pay it. And this hopefully will help you weed out those invoices that came from crafty criminals who are trying to impersonate one of your suppliers. Now, before we get to the one that many skip to their detriment, if you're getting any value from this talk, please hit the like or the thumbs up button to let us and YouTube know that we should make more content like this for you. Alrighty, and now our next building block, if you will, and as I said, the step that many, they just skip. they don't even realize is that you periodically want to do a review, and you want to do two reviews. Number one, you want to sit down and go through the manual, and you want to make sure it reflects what you're doing now, because as I mentioned earlier, sometimes people will implement small changes that don't get reflected into the policy and procedures. When you're doing that review, you might also want to take a look to make sure that you've implemented any new best practices that have come on the horizon that you've heard about. The big one that we've had in the last few years was this phoning to verify change a bank account requests that come via email. The other thing that you want to do, and this is where the real problem comes in sometimes, is that you want to sit with each of your processes and make sure they're doing what the manual says they're supposed to be doing, what your standardized procedures are. Because occasionally what will happen is you'll have a processor who comes up with a shortcut, and the shortcut makes their job easier, and so they start doing it. Now, there are two things about that shortcut. One, sometimes it's a shortcut for them, but it creates a problem for somebody else, or it creates worse, an internal control issue, and of course then you want to put a stop to it. But number two, sometimes it is a good idea because the people closest to it have, the best ideas, if you will. And if that is the case, then you want to implement it across your whole department and have everybody use it. Okay? So you want to do this period. It doesn't have to be a long review, and they really don't need to know you're coming. You don't want to make them nervous. You just want to sit next to them and watch how they process and make sure they're doing what you've outlined as your standardized procedure. To get the most out of your accounts payable process, you must use best practice. Let's investigate what that means. Make sure you stick around until the end when we identify best practices frequently overlooked, and this is unfortunate because no organization can afford to ignore them.
What is a best practice? What makes something a best practice? And do best practices change over time? Are frequent questions asked by accounts payable, accounting, finance, and treasury professionals. Webster's dictionary defines a best practice as a procedure that has been shown by research and experience to produce optimal results and that is established or proposed as a standard suitable for widespread adoption. Wow. Now, what does that mean when it comes to accounts payable, or for that matter, any other accounting function? It is a practice that, and this is in an order of importance, okay? Number one, includes tight controls, okay? It puts controls on the process. So the controls will help you fight fraud and other poor outcomes, such as if you're in accounts payable, duplicate payments, multiple entries in the master vendor file for the same vendor. If you're in HR, you might say it is a practice that means the company complies with all state and federal regulations while keeping employees motivated. That might also apply to AP and accounting also. Okay, so control. There's a lot of controls around whatever is being proposed. Next issue, efficiency. The practice that's being proposed or that's being established as a best practice must improve efficiency, of course, without giving up controls, okay? So it has to be a more effective way of doing whatever the particular task is, not just that it's some new, high-fangled, high-tech, whatever it is, okay? So it must make your whole process more efficient. And by the way, when we talk about efficiency, we're not only talking about the one particular task at hand, we're also talking about the function as a whole. So sometimes, especially in accounts payable, somebody will propose a particular change, which might make that person's job more efficient, more effective, but creates problems down the road. And my favorite example of this is, for example, if your AP folks are doing your GL coding and somebody realizes that it would be much easier to code everything to miscellaneous instead of going and actually finding out what the correct GL code, well, that might improve the efficiency of getting invoices processed, but it certainly would make your accountants less efficient when they had to go and figure out what was the right code, when they had to find these items, and of course, when it came to your financial statements and other reporting that was it's being done. So it must make the process more efficient, and everybody, not just one person, because we're not an island. We're all in this together. Next issue is revolves around reporting, and it should improve either the efficiency of your reporting or the accuracy. Okay, so going back to my GL example, when you code everything to miscellaneous, that does not give you accurate reporting. It doesn't give you a good picture of what's going on. Yes, you know what's being spent in total, for example, but you don't know where it's being spent and if it's being spent effectively. So you want to keep in mind whatever reporting is being done. Okay, next issue, and one, that is often overlooked, but it's becoming increasingly important, and we need to all focus on it, and that is regulatory compliance. Whatever the new practice is or the best practice is, it absolutely must incorporate the necessary tasks that will permit accurate and efficient regulatory reporting. So going back to my favorite accounts payable example, when we have our accounts payable process, one of the things that's recommended best practice is that a W-9 is collected from every supplier. Now, this certainly, when you're talking about setting up a vendor and getting an invoice paid, doesn't make the accounts payable team that's working on it more efficient or more effective. It's going to actually take more time instead of less time. But again, we've got to look at the operation as a whole, not just our one little task. And so getting the W-9, even if it means going back to the vendor several times to request it, is a best practice, because we want at the end of the year to be able to produce our 1099s, and we want to be in compliance with all state and federal rules. And by the way, when we talk about regulatory compliance, it's not only on the federal level, it's also on the state level. And in a few cases, we're also talking about cities. Okay. All right. Next issue. And this relates around cost and expenses. Okay. Ideally, it will reduce costs. Now, this may not always be the case. So, for example, collecting that W-9 certainly doesn't reduce your costs of setting up a vendor or processing an invoice. Also, some of the new verifications that we insist on accounts payable teams doing regarding change of bank account requests that might come in by email, that certainly does not make your process more cost effective, although it does make you more effective in total, because you're not going to fall for a fraud. So it's tightening controls. So that's why we want to look at costs. They are a factor, okay? And for example, that was why when we first started seeing invoice automation models over 20 years ago now, I've been looking at this stuff for over 20 years, that was nowhere close to being a best practice, because those models cost, $1 million, $2 million, a lot of money, okay? And unless you were a huge company, that did not make sense. Now, we know a lot of that has changed today, and so for many, but not all, automation may be a best practice, okay? So we've got to keep cost in mind, all right, but not necessarily realize that in some cases it won't reduce costs because of the other issues we've discussed. Now, I promised to describe the one fact that should not override everything else. I'm hoping that you've already figured out from what I've said so far that cost reduction or expense reduction, while is absolutely desirable, let me make it clear, I am all in favor of lower costs, but it should not be the driving force causing organizations to ignore other components, like the control issue that we discussed, or I've discussed in detail, okay? That could turn out in the long run to be a very costly decision. So, for example, going back to my example about verifying change of bank account requests. Yeah, that takes time, which then time translates into money. And you may, verify 50, 100, and you may say, you know what, every time we call up and we try and verify, they say, yes, it's correct. So you know what, we're going to stop doing that, because it's wasting time and we're not getting anything out of it. And then that one time that you don't verify, it turns out you send $1 million to someone and you can't get the money back, okay? So not cost effective in the long run, okay? So yes, cost, expense reduction, really, important, especially today, but don't let it be the number one factor that causes you to lose sight of some of the other things that we do. Now, as far as best practices being written in stone, the answer to that is no, they definitely are not. And why is this? Because we have new frauds, new technology, new regulatory reporting requirements that mean we need to continually be on our toes to identify these new issues and adapt.
Let's try addressing one of the biggest headaches facing virtually every accounts payable group: the massive amount of duplicate copies of invoices they receive.
We talk a lot about duplicate payments, but not so much about duplicate invoices. This is unfortunate, as one of the unsavory outcomes of receiving more than one copy of an invoice is a duplicate payment. Talking about duplicate copies of invoices. AP now estimates that 25% of all invoices received by companies are duplicates, and they're duplicates of invoices that are not past do. They're just multiple copies of the same invoice, either emailed to several different people or emailed to and mailed, put through the snail mail. Okay. This has become a huge problem because it creates a lot of extra work for the accounts payable team, non-value add work, by the way, that virtually no company is adding staff to handle. And occasionally those invoices slip through, those second copies slip through, and a duplicate payment is made. And as you know, duplicate payments are rarely returned, but I'm not going to go down that road just now. Okay, so what can you do? There are steps that you can take, and I'm going to go through them. They're pretty easy. Number one, encourage your suppliers to email invoices and email invoices only. This eliminates the snail mail. It gets that paper out, and it will eliminate some of the duplicate copies of your invoices. Not all of them, because you're still going to have the folks who email it to several different places. And of course, when you encourage your folks to email invoices, you're going to give them an email address, a unique email address that takes only invoices, is not used for anything else. Okay, so encourage emailed invoices only, big emphasis on only. And there are some other benefits for that, but I'm not going to go off on a tangent, or at least I'm going to try not to. Step number two, weed out the duplicates as early as possible in the process. And the reason for this is the earlier that you weed them out, the less time you waste processing them, because the last thing you want to do is go through all your different steps of processing them and then at the last minute realize, oh, this is a duplicate, and then you have to throw it out. Better than making the payment, definitely, but a lot of wasted effort for no added value other than you didn't make the duplicate payment. Okay, next step. It's pretty simple. Ask them to stop. Once you've figured out who these people are who are sending multiple copies of invoices, you can just ask them to stop. You can either call up or you can send an email requesting only one copy of the invoice be paid. Now, of course, if it's after the due date, the vendor is within their rights to send a second copy of the invoice, but that's not what we're talking about. We're talking about organizations that pay on time through the normal course of business, getting 3 copies of the same invoice before the due date. Okay, so ask them to stop. A little extra effort, but it will pay off. Next step, after you've asked them to stop and they keep doing this, identify the repeat offenders, okay? And you want to identify these repeat offenders because you're going to have to give them some extra special attention to make sure that you don't double pay. So identify these repeat offenders, and I'll tell you what to do with them a little bit later. You also want to identify, and this can be a real problem, those sneaky suppliers who send the second copy of that invoice, not in the beginning when they send it to 4 different people, but either on the due date or right before the due date. And they send the second copy, I believe, many of them, with the hope that you'll think it's a rush, you'll think you've missed the invoice, and you'll make a second payment, okay? Now, sometimes if you've talked to them, they'll say, well, it's just a reminder. And, my instinct is to say, well, don't remind me unless I haven't paid. Don't help me, because your help isn't really help. You have to be a little bit more polite than that, okay? But you want to identify these guys, and you really want to keep a close eye on them because you may make a duplicate payment. Our next step is, once you've identified your repeat offenders, be they just repeat offenders or these sneaky guys sending them at the last minute, you want to have another conversation with them, and I call it threaten, but you probably be a little bit more polite than me, to put them on the ACT list. I call the ACT list the always check thoroughly list. This is a list of vendors who you're going to double check every single one of their invoices before you make a payment to make sure that you don't duplicate pay it. And the end result of this, you might share with them, is that the payment will be delayed because you're having to do this double checking. Now, you can say it nicely to them, but at the end of the day, you don't want to make a duplicate payment. And if you need to do this double checking, it may end up delaying their payment. And that is not what they want, because after all, at the end of the day, well, yeah, it would be nice if you pay them twice. Really, what they're trying to do, most of them, is just get paid. And so the best way in this case to get paid is not to send multiple copies of the same invoice. Okay, so now after you've done all this, you've gone through all your steps that I've suggested, maybe a few of your own that you've come up with. And if you have some extra tactics that might work, feel free to share it in the comments below so that we can all benefit from this. And you've got your list now. You're not getting so many duplicate copies of invoices, and you can rest on your laurels, right? Wrong, because these duplicate invoices, I like to say, are like weeds. No matter how much you work on them, you pull them, you try and train them to do the right thing. No matter what you do, you can never get rid of them completely. Companies that send them will either, maybe they hired a new person, and that person comes in and they think, oh, this is a great idea, or somebody comes up with this idea, or a company that wasn't sending duplicate invoices now starts doing it. So the problem never goes away. You just have to stay on top of it, just like weeds, to try and make sure that you keep it under control. Because when you go and you ask a company to stop sending duplicate copies of invoices to you, and even when you threaten them and you say, well, hey, we're going to put you on the act list and this is going to ultimately end up slowing down payments, if it is their policy and their procedure to send these duplicate invoices, in all likelihood, they are not going to make this one change just to accommodate you for your special requirements. So you got to stay on top of it. So repeat, go back, encourage the emailed invoices, talk to them, identify the offenders, and keep at it. And maybe someday we'll get to the point where this isn't an issue, but I don't see it in the next few years.
Since accounts payable is all about invoices, let's review some of the best practices around invoice processing. Invoice best practice number 1. Procedures for handling invoices should be standardized. Everybody should do everything exactly the same way. That way, if an invoice comes in today and I process it, and one comes in 2 weeks from now and you process it, you'll be able to identify it as a duplicate fairly easily. Invoice best practice number 2. Annually, the manager should review the work of each processor to ensure compliance with those standardized instructions. Any shortcuts should be investigated. This does not have to be a big formal process. Just go, the manager or who's ever doing the review should just go and sit with the processor, tell them just keep operating the way you normally would, and then watch how they do it. Are they using the standardized procedures that you've outlined for them, or have they integrated a shortcut that they've come up with? If they've integrated a shortcut, you want to investigate. Oftentimes those shortcuts will make their job a little easier but create a problem down the road. And if that's the case, if you have a control problem, for example, or someone else isn't able to do their job because of this shortcut, then you want to cut it off, you want to stop it. But if this shortcut turns out to be actually good, then you want to use it, you want to integrate it into your processes and make sure all your processes are using it. Invoice best practice number 3. Centralize the receipt of invoices with one special email address just for invoice, a very specific snail mail address for those folks who are still mailing their invoices by paper, and a fax address just for invoices, because some people are still faxing invoices. And ideally, by the way, if you do have that fax address, you want to tie that up, match it with an e-fax facility that will convert that paper faxed invoice into an electronic document that's emailed, and you can be processed from there. Which brings us to invoice best practice number 4. Push for electronic receipt of all your invoices. By electronic receipt, I mean either using your portal or your automation solution, or, and this is how most of the invoices are coming in today, invoices should be emailed. So you remember the separate address that I told you to set up. Invoice best practice number 5. When selecting an automation solution, make sure it can read PDFs that are emailed in. That way, you don't have to harass your suppliers to change their process, which you know is always a nightmare. They can just continue emailing you their invoices as they have been doing it, and then you don't have to get them to change anything, because as you know, getting a supplier to change is often not easy. Invoice best practice number 6. Ruthlessly weed out duplicate copies of invoices. Unfortunately, we're in a situation now where some suppliers have realized that email costs practically nothing, and so they'll send multiple copies of the same invoice. This creates extra work for your accounts payable staff, and if you're not really on top of it, it will also create a duplicate payment. So you want to be really ruthless about weeding out those duplicates. Invoice best practice number 7. You want to identify those suppliers who are sending duplicate copies of the invoice, or triplicates, or whatever, and you want to ask them to stop, but if they don't, you want to double check all their invoices. And in fact, you can even tell them, hey guys, if you don't stop sending double copies, we're going to have to put you on our special list that will, where we double check, and that will probably delay your payment a day or two, and they're not going to want that. Invoice best practice number 8. You want to have a coding standard, and you want to insist that that all your processes use that coding standard, even if you are automated. Why? Because even if you're automated, there's still a certain amount of manual data entry that needs to be made. There are corrections that have to be put in, and you'll still be getting some paper invoices unless you're really, really lucky. And you want your people to stick to the coding standard for the reasons that we used it in the past. It helps reduce duplicates. Invoice best practice number 9. When your processes are handling invoices, you want to use the three-way match so they can identify potential problems on the invoices. Okay, that's your best way of weeding out invoices that have inaccuracies on them. And we've got several other videos on the three-way match, and I'll put a link to them in the description in case you want to investigate that more. Invoice best practice number 10. When your processes are processing invoices, they're going to have some that have discrepancies and need to be followed. The manager should track this and follow up to make sure that these discrepancies are being resolved, because if these discrepancies are not resolved in a very timely manner, a second copy of the invoice will be sent. That's extra work for you guys, and sometimes those second copies get paid. So follow up on discrepant invoices, and if you can at all possibly do so, get them resolved before the payment date so that the payment is made on the due date, and then you don't get that second copy. Invoice best practice number 12. When discrepant invoices are resolved, and hopefully you're tracking this either in your ERP system or maybe in a spreadsheet, you want to make a note of the cause and then track this, as I said, in the spreadsheet. Periodically, then you want to go back and review it and see if you can identify root causes or root problems. Let's say you had 100 discrepant invoices and 25 of them had the same problem. Well, you want to look at that problem and say, what can we do to fix it? Oh, all these invoices were a result of POs coming out of our Duluth office. Maybe our Duluth office needs a little more training on how to put together POs, or whatever it is, okay? So you want to fix the problems that are the biggest ones and also the easiest ones. Even if you only have 2 or 3 invoices with this problem, if it's really easy to fix it, just go ahead and do it. Periodically, you want to do this analysis. This is not a one-shot deal, because even though you'll maybe do the analysis, you'll get most of your problems fixed. This redoing the analysis will help you identify new problems that may have cropped up, and there's always new problems on the horizons, as well as, and this pains me to say, old ones that may have returned. Just because you think you fixed the problem once doesn't mean that 6 months or a year from now it's not going to be bad, especially if you have a turnover in staff, or there's a turnover in staff at one of your suppliers, because who knows what's going on there, and of course you have no control over that. Invoice best practice number 13. Invoices with early payment discounts should be tracked, identified, and fast-tracked so that you earn as many of those early payment discounts as you possibly can. I had one accounts payable professional tell me one time, the only mortal sin in our organization is missing an early payment discount. It's the best financial return for your organization, and you want to make sure you get as many of them as you can. And for a really selfish reason, if you're losing a lot of those discounts, you can better believe somebody in finance is going to realize it and do a little analysis and point it out at a time just when you don't need them to be pointing that out. Invoice best practice number 14. Insist that your suppliers include the purchase order number on their invoices. Now, you think they would automatically do this, and many do, but there are a few who don't, and that makes it more difficult for your processes to figure out who to send the invoice to for approval, and also to do the three-way matching, and also to extinguish the right purchase order. So if they don't include it, just send it right back to them and say, we need the invoice to include the purchase order number. Yes, that will take a little bit of extra work, but doing a little bit of extra work now will save you time in the future as they submit many invoices. You want them to have, so insist on the purchase order number. Of course, this assumes that you issued a purchase. Invoice best practice number 15. Once an invoice is processed and scheduled for payment, the related purchase order and receiving documents should be extinguished immediately. No waiting till the end of the week or the end of the month or when you have time. Immediately. That will make it less likely that if a duplicate copy of the invoice shows up, it will be paid. Invoice best practice number 16. Invoice processors should not update the master vendor file. You should have a separate person to do that, because if your processors are doing it, it is a violation of the appropriate separation of duties principle, which is the bedrock of our strong internal controls, fraud prevention, and duplicate payment protection. So your invoices should not be updating master vendor file. I know a lot of people do this. It's easy, but it's not the right way to do things. Sometimes the right way is not the easy way, as I'm sure you've noticed before. Invoice best practice number 17. Don't leave processors handling the same accounts year in and year out. You want to periodically rotate them. This is because if you leave them on the same accounts, there's a chance that they'll become friendly with the processor on the other side, with the accounts receivable person, which is great if you have a problem, but not so great if the two of them become so friendly they collude and then they defraud one or both of the organizations. So periodically rotate them. Along the same line, best invoice practice number 18, require that anyone having anything to do with your organization finances, and that includes processing invoices and the master vendor file, that they take 5 consecutive days off, during which time someone else handles their task. It's general consensus that if there is an ongoing fraud, it will be uncovered during that time period. So don't let them do the job from home. That completely negates the whole purpose of having them take the 5 consecutive days off. And invoice best practice number 19. Invoices should never, ever be paid by an individual personally and then put in for reimbursement on their expense report. For if they do that, it will be virtually impossible for you to identify a duplicate payment, because when that invoice shows up in the in the normal course of things, your processor is going to go process it, the purchase order is going to be outstanding, the receiving document is going to be there, and they're just going to go ahead and pay it. And as you know, very few vendors automatically return duplicate payments. So do not let anybody do that. And if they do it, you make a big to-do about it and basically tell them if they ever do it again, they're not going to be reimbursed. And then immediately make sure the purchase order and the receiving document are extinguished and your accounting records are updated appropriately. Now let's take a look at some best practices in accounts payable that address issues other than invoices. Sadly, there are some best practices that are ignored by over 80% of all organizations. Does this mean you can safely ignore them as well? No, absolutely not. Unless you are happy explaining to management why you had so many unrecovered duplicate payments and why the team fell for a fraudulent scheme and you can't get their money back. We'd be remiss if we didn't identify those practices no organization can afford to ignore. By their very nature, best practices incorporate strong internal controls. You can't have a best practice without them. We think that an understanding of internal controls that underlie best practices is so important. We did a video on that very topic, a short video. You can watch it right now using the link that has appeared on your YouTube screen and it's in the description. Good luck. There are certain basic best practices you absolutely cannot afford not to use. We're going to identify 10 of them and explain what can go wrong if you choose to ignore them and not incorporate them into your basic process. As some watching this might be aware, I'm the author of over 20 business books, most of them focusing on the accounts payable function, including 127 best practices for accounts payable. While I'd love it if every company would use all the best practices I talk about, I realize that in the real world, the one we all live in, that is not likely for a variety of reasons. But the 10 we are about to discuss are vital, for without them, the bottom line, i.e. your profitability, will suffer, and in a few extreme cases, the losses will be so severe the company will not be able to continue. Don't let that happen at your company. Make sure, at a minimum, the following are used. Must use accounts payable best practice number 1. Set up one central email address for the receipt of invoices and invoices only. If you allow invoices to be sent wherever the supplier chooses or guesses to send them, they will A, send multiple copies to different people, or B, email and snail mail the invoice, or C, email them to an individual who may or may not get around to forwarding that email to the accounts payable team for processing. What's more, individuals take holiday, get sick, and sometimes just forget. They also leave the company. Of course, while the supplier may not have sent the invoice to accounts payable, They certainly know enough to call accounts payable when it's not been paid within the time frame that they deem is reasonable. The end result is that process works more smoothly for everyone involved if they just send the invoices to accounts payable and send only one copy of that email directly to the centralized email address. Must use accounts payable best practice number 2. Get a W-9 from every new vendor. Now, sometimes the supplier will assure you that they don't need to provide you the W-9 because they're not reportable. They may be right, they may be wrong, but it is your company that's going to get hit with a B notice if they are wrong. And it is your company that's going to have to pay the associated fine. And it is your company that will now have raised its profile with the IRS as one that's not compliant with IRS guidelines. So get the W-9 from every single vendor and do the verification yourself. They could be right, they could be wrong, or they could just be trying to pull a fast one so you don't report their income and they don't have to pay income tax on it. There is one last reason to get that W-9. Some of you may remember, even if you're trying hard to forget it, that at one point over 10 years ago, there was talk of having to report all income to the IRS on 1099. That was repealed, but most tax professionals believe it will someday come back, and you want to be ready by having collected all your W-9s. Collecting the W-9s is just the first step. There's more. Must use accounts payable best practice number 3. Run every W-9 information, the information on the W-9, through IRS TIN matching to ensure that the information provided by the supplier is accurate, i.e., the name on the W-9 matches the name the IRS has on its records associated with that particular TIN. The TIN, in all likelihood, will be an EIN for an entity or a social security number for an individual. Don't wait until year end to run this information through IRS TIN matching, which is the free service from the IRS. Do it as soon as you receive the information and before you make the first payment. That way, you are in the driver's seat and can get the supplier to correct the information if it is not correct, because they want to get paid. Must use accounts payable practice number 4. Set up and insist everyone on your staff use the strict coding standard for entering both invoice data and setting up vendors in the master vendor file and making changes to the vendor file. You need this even if you're using an automation solution for invoice or accounts payable processing. Why, you ask? Because even with an automation solution, your folks will still have to do some data entry. They will have to put through corrections, and as many have discovered the hard way, utilization of automation solutions is not 100% right off the bat. So don't let your folks introduce errors because they aren't using your standardized data entry protocols. Must use accounts payable best practice number 5. Use the three-way match when processing invoices to ensure that invoices aren't paid twice, the correct amount is paid, and the correct price is charged, and no extra fees are tacked on that have been negotiated to be paid by the seller. Also, this is one of the best ways to catch phony invoices or fraudulent invoices, for there'll be no purchase order or receiving document to match against. Must use accounts payable best practice number 6. Use positive pay to protect against check fraud, since in all likelihood, if you're watching this and you're a U.S. company, you are still issuing paper checks. If your bank offers it, take advantage of payee name positive pay, as it adds that extra level of protection against someone stealing one of your checks and altering the payee name. Even though there is a huge push towards electronic payment, there are many new types of electronic payment fraud. Check fraud still remains the most commonly attempted type of payment fraud. Thanks to positive pay, not many of those attempted frauds make it through. So, protect yourself fully by purchasing a positive pay product from your bank. Must use accounts payable best practice number 7. Verify anything out of the ordinary before executing the change. The most vicious of these frauds in recent years is the plethora of phony change of bank account email requests that have been inundating accounts payable departments everywhere. But this is not the only type of fraud to be on the alert for. Anytime there is anything that is outside the normal way you operate, verify it before executing. Don't think that you're too small, that it wouldn't be worth anyone's bother to try and defraud your organization, or too big and crooks wouldn't dare try. Neither is true, as both big and small companies alike have learned, unfortunately, the hard way. Absolutely everyone is a target. Before we get to the last few best practices, including one that sadly is frequently ignored, if you find this information useful, it would be helpful to me if you would hit the like or the thumbs up button. It sends a message to both this network and me that this content should be shared and more like it created. A big thank you from me to you if you're one of those individuals who hit the like button. Must use accounts payable best practice number 8. Aggressively move away from paper checks. They are expensive, require lots of manual effort, and are generally an inefficient way to operate a payment function. Those efforts could be used on more value-add tasks, like verifying those change of bank account requests are valid, doing the increasing amount of regulatory reporting now required, or perhaps even some of the analytical work that can help you run a more efficient and effective department. You may just be surprised to find out how many of your suppliers are receptive to receiving an ACH payment instead of a paper check. I'm pleasantly surprised, I might add. Must use accounts payable best practice number 9. Daily bank recs are a must if you wish to recover any funds associated with an unauthorized ACH transaction that was executed against your bank account. While individuals have a longer period of time to refute such unauthorized charges, entities, which is anyone who's not an individual, have only 48 hours from the time the transaction hits the bank account. The fact that you didn't check your account in that time period is unfortunately irrelevant to this consideration. Since many only check their accounts once a day, assume the worst case scenario, that the transaction hit right after you checked your balances, and conduct daily bank recs. Some best practice organizations will actually check several times a day to ensure that no unauthorized transactions slip through. Must use accounts payable best practice number 10. Appropriate separation of duties across the entire procure-to-pay chain is an absolute must. For without this separation, the necessary checks and balances are simply not in place. With technology making serious inroads into the accounts payable department everywhere, accounts payable departments are getting smaller and smaller. Why is this such a big deal? Because if one person has access to more than one leg of the procure-to-pay process, it becomes much easier for that person to defraud the organization. Will most do this? Absolutely not. But the problem is you don't know which employee is the one that has that dishonest streak. Time and time again, when there is an internal or occupational fraud, the perpetrator ends up being a long-term trusted employee, the exact type of employee that sometimes gets access no employee should have. There are certain best practices in the accounts payable process that many companies skip over. They think, they take too much time and they are not really necessary. It would force them to step out of their comfort zone, sometimes put them at odds with management or other employees, or require additional training. But then when disaster hits and management wants to know, how did this happen? Or why didn't you catch this sooner? They don't have a good answer. Don't let this happen on your watch. Let's take a look at 5 of these ignored best practices. We'll discuss what they are and why it is critical that you use them. Ignored best practice number 1, daily bank recs. That's right, bank recs on a daily basis. Not doing this can literally cost your organization millions of dollars. I'm not exaggerating. Let me explain. If there is an unauthorized ACH debit against your account, you have a very short, limited period of time in order to notify the bank and have that transaction reversed. You have 48 hours from the time it hits your account. I like to tell people you have 24 hours because you look at your bank balances this morning, let's say at 9 o'clock. A lot of companies will have someone who looks at it first thing in the morning, and everything is fine. So you close out the bank balances and you go about the rest of your business. At 9:01, an unauthorized transaction hits your account, but you don't look at the account again until tomorrow. So you've already wasted 24 hours. Daily bank recs are critical. And I also have to tell you, it's easier to do a daily bank rec when you only have a few items to reconcile against than a monthly one where you have hundreds or even thousands to try and find the problem. So you benefit on both ends. So daily bank recs, you don't want to not do it. Ignored best practice number 2, and this one boggles my mind. Company card retrieval when an employee leaves the organization. This one won't be as expensive as the first one, but it's likely to enrage management when it happens. So here's what happens. When an employee leaves the company, most companies are good about retrieving the company credit card, but they don't take the second step, and the second step is critical. The second step is canceling the card with the bank. If you don't cancel the card with the bank and the employee uses the card to charge something, you're still going to get charged for it, and you're going to have to pay. And then trying to get that money back from the employee is often difficult. If an employee has gone out of their way to write the card number down, the expiration date, and the 3-digit code, then they're going to give you a hard time about returning the money. So don't have this problem. Make sure HR notifies the card, whoever manages your card program, so they can notify the bank immediately and cancel the card. Did you notice a theme here? Not using the best practices I'm discussing costs company big time. Money that comes right off the bottom line makes the organization less profitable than it might be otherwise. If you're interested in learning more of this type of information, the business intelligence you need to run a more efficient and effective accounts payable function or manage it, and make yourself look good to management in the process, please hit the subscribe button and please give us a like. It helps both us and YouTube know that the content is valuable and it should be spread to more people, and we should make more like it. Ignored best practice number 3. You want to rotate your employees who deal with your outside either customers or clients on a fairly regular basis, like once every 6 months. When we're talking about the accounts payable function, we're talking about rotating your processes. Now, this is one that many people just think is a waste of time until they get hit. Now, I'm going to be the first to admit this doesn't happen often, but when it does, like tornadoes and earthquakes, the damage is horrific. So you want to protect yourself against it, and there are many other benefits from this step. Let me explain in a little bit more detail. I'm talking about rotating your processors so that they don't get too friendly with the person on the other end, the person at your supplier, so that they collude and they defraud one or both of the companies. As I said, it doesn't happen often, but when it does, it is a nightmare. And it's very easy to prevent. Just rotate your processes. The other benefit that you get when you do this is if you rotate your processes, then you have people who know various different accounts, and you have some sort of backup in case somebody is out or somebody leaves unexpectedly. There's a family emergency and they're not there. It doesn't cost you anything. Yeah, your employees are going to complain a little bit, but it's a best practice. And I have to tell you, the number of companies that do this is minuscule, but it really is a best practice. All right, I'm going to stop ranting and raving about that. I'm going to turn my attention to ignored best practice number 4. This involves mandatory vacations. And again, this is one that by doing surveys at AP Now, we survey our members and people who get our free easy on a regular basis. And I always ask this when I do webinars, almost no one implements. And many times, at least in the United States, this is because companies are a little bit stingy when it comes to vacation time, and other people say it's not a problem. So this is the best practice. You need to make sure that everybody in your accounts payable department, basically anyone who has anything to do with your money, takes 5 consecutive days off, and during that time, someone else does their job. And the feeling is if there's an ongoing fraud, it will unravel during this time. Now, you should be aware that when there are these ongoing frauds, many times the employee who's perpetrating it won't take vacation because they need to be there to make sure that everything is covered. And these frauds can go on for years. An often overlooked part of accounts payable is the related accounting required. To make sure you are up to speed on what's required, click on the link that has appeared on your YouTube screen and is in the description. It will get you started on the accounting aspects of accounts payable that you need to know. Good luck.